Huh?
Yeah.
And what I said, if you do your homework in terms of the decline, the growth gap, as we call it, right? So what are the gaps that we need to bridge with the interventions that we do? Might be new products, repositioning, etc., etc. But there's all. So if you understand this well, you can sort of filter out on what type of pathways you should start to look at. Huh? I mean, there's also many examples of basically that. Um, how can we invest better in even our media, right? There's so many things on, if you understand your business case, your P&L, and how the business is built, and you dissect each of these elements, you can find, first of all, your efficiencies, and second, you will learn also where do we decline, why, a bit to the point Jeroen mentioned, and see how we could improve that case.
Everybody, welcome to this Founder Institute event. My name is Jonathan Grecian, co-founder and CEO of the Founder Institute. We should have a nice international audience today. We saw registrants from all around the world. This is a live event. We try to make these events interactive as well. So to kick that off, please don't be shy. Let us know where you're joining in from in the chat here. I already see a couple of people are joining in. Let us know where you're coming from. Even our speaker list has people from all around the world. But here we say Joao is in Portugal. Welcome. We have Dubai. Ahan is a member of the Founder Institute team. But yeah, let us know where you're joining in from. We should have a great audience here. And really something that I'm going to be encouraging is questions in the chat. Okay. Uh, Webinars are the most effective when there is a dialogue between audience and speakers. So please don't be shy. We're going to be trying to pepper in your questions throughout this whole conversation today, trying to make this interactive. So very quickly, just in terms of a run of show today. So very quickly, I'm going to introduce the topic. We'll bring on an amazing panel of speakers that we have. And then we're going to go through a kind of free-flowing discussion. And again, please feel free to ask any questions that you have. And then after that, we will open up to a broader Q&A session. And then we'll go back to that networking lounge where you can network with other like-minded people. So the topic that we have here today is definitely an interesting one. Innovating for today and delivering results for tomorrow is a constant challenge for any large corporation. And honestly, I think for CPG, consumer packaged goods companies, it's even a bigger challenge, right? Because they're not just deploying code in a lot of cases, right? They're also deploying physical products. So longer lead times, supply chains, a lot more complexity, right? And these are big bets, that risky bets that people in this space are trying to put into place. And then you mix AI into the equation and just the speed of innovation, right? And this is just becoming a bigger and bigger challenge. And that's why we put this event together today. And we got some amazing speakers here to just give us some perspectives from some of the largest consumer CPG companies in the world, and also some of our partners at 10x Growth, who are probably the most knowledgeable corporate innovation people that I know, to provide their inputs as well. So I'd like to just invite all the speakers up to the stage here. We'll do some quick introductions. So welcome everybody. I think first maybe I'll start with Nicola from Perrigo. Nicola, would you like to give an introduction?
Yeah, sure. Hi everyone. Thank you, John, for that, and thank you for inviting me to this. My name is Nicola McMahon-Staines. I lead the consumer experience globally for the Women's Health Group at Perrigo, which is a company that provides great quality self-care products.
Got it. And Nicola, where are you based again? Is it?
And I'm based in London, actually,
in London.
England.
Okay. Awesome. So now we're going to go very far away down Sebastian, who's in Santiago, Chile right now. So Sebastian, would you like to introduce yourself?
Well, hello everyone. Pleasure being here today. I'm Sebastian. I'm the accelerator coach for the R&D Latam at Nestlé. I've been in this role for over a year, and my background has experience in car manufacturing, startups, and big and small organizations. So very happy to share the floor with these people today.
Awesome. And then our final two speakers today are coming from 10x Growth. As I said, that we've partnered with this organization at the Founder Institute because these guys know what they're talking about when it comes to corporate innovation. So I think maybe Misha, if you want to start it off, and then Jeroen.
Hey everybody, thanks for having me. So Misha de Sterk, based in Amsterdam, working for the last 10, 15 years with large companies, helping them to grow their business. And innovation is part of growing your business on the mid and long term. Yeah, and let's dive into the complexities and challenges of this topic.
Awesome. And last but not least, Jeroen.
Thank you. Looking forward to the webinar. So my name is Jeroen. I'm a partner at 10x. 15 plus years experience in CPG industry, working for both startups and corporates. And my focus is on product strategy. So I'm helping them with growth strategy, new business development, but also if things are declining, we help them to renovate their portfolio and thrive again. And again, looking forward to discussion about this topic.
I like the term renovating the portfolio of products. It's a good perspective for it. It's not rebuilding.
It's better word than downhill, right?
Yeah, not demolishing, right? So okay, let's get to the topics at hand, guys. And I'm going to try to be a sponge myself during this because I know that I'm going to learn a lot from this conversation. So I think, the way that I'm thinking about kind of guiding this is that, the first topic is that we'll start to dive into some of the challenges that CPG companies are facing today, and start to see what are some of the strategies that you guys are seeing in the space and some of the trends that are really starting to bubble up to deal with the increasing speed of innovation, the increasing number of competitors, the AI, supply chain, all this kind of stuff. And then after that, I want to zoom in a little bit more on startups, right? And how corporates see startups, the role with startups, what successful collaborations look like, and all of those sorts of things. So, maybe I'll kick things off here in, saying that there's a lot of different approaches to corporate innovation, right? Some are better from some companies. And I would love to hear, maybe Nicola, if you want to help kick us off here, I'd love to hear, how at Perrigo, just what are some strategies for seeing which of these, different approaches are right for you?
Yeah, so I think if I just take a step back and think about it in the context of, does one size fit all, as you said, John, many different approaches, and observations around, many of the kind of experiences I've had in the past and also today is coming back to that point of there is no magic bullet, as it were.
Yeah.
How do you actually understand what is that best approach, and is that approach from the top down or is it from the ground up? And as I think about the way in which we've started to look at the women's health business, I start more on that kind of ground up thinking in terms of, each business challenge is different. Each of our products sits at in a different space, in a different maturity level. There are many different dimensions. It has a different need to get to, different types of consumers, many different things to think about. So, if I applied all of that to one structure, let's say, for example, if I thought about the macro trends of women's health, I may end up being in a situation where I'm stultified by the need to follow these macro trends and spend a lot of time trying to figure out what I need to do there in order to meet those trends, and never really move on anything because it's too big, too much to think about. On the other hand, if I took an approach like a horizon structure, then I might end up just stuck in that kind of first horizon because I'm constantly trying to move, constantly trying to move resources, finance, whatever it is that's going to make that happen in that space and never quite get to that horizon there. However, when I look at it from a brand and product perspective, so from the ground up, and I do the work based on a business challenge, based on the needs that particular brand or product has, and think about where it wants to get to and start to kind of bring those two things together, then I'm building that pipeline specifically for the needs of that brand. So, and even that's not going to look the same, one brand versus another.
Right. Yeah. So it's not even just per company. It's per product. It's per, audience. In some cases, like per geographies too, right? I mean, it's like you can slice this and dice this thing up in so many different ways. So it's just can be overwhelming, I'm sure. Sebastian, I'd love to hear, from your perspective, you guys have an accelerator, right? So like that is a very specific approach.
So quite in line with Nicola. The one size fit all, it obviously doesn't work, and I think one of the main reasons behind it is the culture you will find in different organizations. So understanding the culture of the different big corp or startups will define the right approach they will take. Some are more conservative, some are more risk takers, some are more willing to work in open environments, some are more internal focus. So understanding your culture and what makes more sense within these organizations can help you to move faster. If you don't understand the internal culture for the organization, you try to bring something completely new, you might find a lot of resistance and struggles. So I think one of the big stages for people joining organizations or big corporations who started working with them, one of my first advices will be try to understand well what defines their organization, what it makes different from others, what's their culture, and from that will help them to make better decisions on what to offer, when to offer, and how to approach it.
Yeah, interesting.
And go ahead, Misha.
Yeah, so I was thinking that there's a reason we call 10x growth, right? And what I always find interesting is that if you bring it back to what is it that we need to do as a commercial company is to sell products, right? And we want to sell more products to more people, or we want to sell more products to the same people, or any of those mores that we want to answer. And so if that is the goal, if you bring it back to that, if it's R&D or brands, in the end, you need to grow a business. And of course, I know all these people well. I think why it also works is that indeed there is not so much this quick fix or process that you can follow that will help you to bring success, because then we probably would have done many different things if there was a process that brings us always the good stuff. And so it's reasoning back, right? So it's reasoning back saying, what do we need to achieve? In what type of timeline? What are our current assets? Where do we have our strengths? Where do we miss capabilities? What do we need to develop? And sort of bring that in a more systematic manner to the right people in the company. And there we as externals are very dependent of the creativity, the perseverance of our partners at the other side. But what I always find interesting as an outsider is that there are many initiatives in a company, and there are many research reports, there are many a startup accelerator here, venture building thing on the other side. But how can I grow my brand? How can I bring growth in a commercial way, in a way that people understand it and that it makes sense together as a whole, right? Not all these fragmented initiatives that don't communicate together. At least that's the point of view I have.
Yeah, and if I may build on that, because I really like this concept of thinking about it from a growth angle and not innovation per se, because we seem to separate those two things, and we very often think about growth from a very commercial, short-term perspective, and innovation is this big thing that happens somewhere else and sits above everything else, and maybe we'll get there one day. But for me, it's it is growth. It's all about growth, and innovation is a capability within growth. And actually, the growth has to come from your core business. And yes, eventually, it makes sense that there may be other products and things that you bring to the pipeline, but the core business kind of catalyzes everything. So for me, when I think about it from a growth lens, it's more about looking at it as faster scaling, less risk. So de-risking everything, because you're looking at it from the lens of something that exists. And I think the one true thing that you can say about anything in a business is you have an asset and leverage it as much as you can. You have consumers who are buying your asset, leverage them as much as you can. So let's not forget what's happening today, and not lose sight of you have that core that exists. And actually, I had a perfect example of a great conversation about growth this morning, which was, there was a question about whether or not we had anything in the pipeline to create a better product than the one we've got in market today. And the answer came from a very astute marketeer, and I was really pleased to hear it, because, Seba, you talk about culture. But the answer was, no, we don't need a superior product. What we need to do is make sure that the product we have is capturing the audience that is out there for us to capture. So that's very great answer. But actually, the truth is that is what it comes down to when it comes to no one size fits all, because for that example, that is super important. For another example I'm working on, it could be that some of the claims that we have to make have to change, therefore we need to change the product. So, and that comes with a completely different flavor.
And that definitely maps back to what you were saying, where growth, right? Because if it was like innovation, yeah, it's such a fluffy term. When it's growth, it's like, okay, well, we have this product. How can we grow it? Like, we have a growth goal, right? And just, okay, well, you can renovate, as you were saying, Jeroen, right? It doesn't have to be a totally new product. You can reposition, remarket, things like this. And I think we're starting to go into like the topic of like developing the innovation roadmap, right? And and you mentioned too, like leveraging the core assets, and Jeroen and Misha, you guys really, I know, spend a lot of time with corporations, like kind of going through that exercise of figuring out, okay, what is the growth goal? How do you work backwards? What is the core of the business? And then starting to figure out what are the kinds of bets that would actually align with the core and have a realistic chance of hitting that growth goal, right? Like just, and I'd love to hear, your guys' thoughts on that, because I know that there's a lot of corporations that do not look at it from that lens, from, it is in this innovation-y kind of space that's just like sort of there, but not necessarily attaching, growth goals and trying to show actual results, right?
Yeah, maybe just to, because I know Misha probably is also dying to jump in. So I
No,
think
no, no. Feel free.
the thing always is that with innovation, we always label it as something new, right? As finding something new. But I think always the strength is, right, when I have an existing product in 35,000 stores across the world, right, that's the biggest asset you can have. So if you want to grow, right, you need to do something new or something entertaining or more fun, etc. But it doesn't mean you need to do something different, right? You can also look at your strengths and see how we can leverage those into something that's more appealing. Also, to Nicola's point, right? If you look at it from a growth lens, then all of a sudden you look at things differently, right? So what do I have? What's good? What's appropriate? What do we need to change? It's kind of, what do we need to protect? What do we need to transform? And then innovations all of a sudden becomes a more tangible topic, right? Because the things I cannot do, maybe I can find something else, but the things I can do, I can change quickly, right? And then I was also triggered by what Nicola mentioned, right? Sometimes you just need to move, but moving also means is a controlled risk, right? So do I take a big step, a small step? Big step means I run an accelerator. Small step, I look at my same product but a different marketing tactic, right? But it's kind of, we need to frame innovation differently, right? It's not that next shiny object. It's just doing something different with the things I have. There's a limit, and if you cross the limit, yes, then there's probably need for something else, but only until then. And then it becomes really tangible for anybody, right? Just to build your innovation roadmap, right? And also to win, right? Because probably if you have 35,000 stores across the world, that's a big asset to leverage. And it's not something else, and not many companies can copy paste that. So if that's your asset, right, then build on that.
Yeah. And I'd like to dive in quickly there too. Just, you said if you've hit that limit, right? So essentially you're like, if it's saturated market, or you've done all you can do. And I'm sure that a lot of corporations probably think that, right? In some cases, and that's why they turn to something like innovation, which is not so tangible.
Yeah.
How, I mean, how have you guys, when you start to define where are opportunities, right? So it's within your product, you said repositioning, right? But then it could also be, okay, you have this established audience or these established distributors and things, right? So you can really just start to dice it all those different ways, right?
I think we just had finished the talk with Misha. Right, so if you look at decline, right, so the analogy we use, right? So if you have a soccer match and the competition is better, you lose, right? But in 90 minutes, and then it's done, you go to the next game. If you're in this retail space, it's kind of you're losing in slow motion, right? So you're losing every quarter, a little percent here, a little percent there, and it starts to hurt 24 months from now, right? But when the moment you identify that it hurt, it's already 24 months since it started, you're automatically too late, right? So the thing is where, and then what we start looking for is, right, building something new instead of identifying what happened 24 months ago when I start dropping. And so the question is look back and then forward, and what holes to plug, and right, did the market change, did the competition change, or did I do something myself differently that made other people win, right? So it's kind of a way of looking at things again, right? It's the but decline doesn't necessarily mean that you cannot change. It's just looking at it from the right time frame, right? Because if I look at it today, right, probably it means that you see it doesn't fit. But actually the decline started way back, and that's when, right, if you identify that, you also know the root cause, and you better understand how to fix it.
And you don't need hundreds of researches to understand that. And I think that's another thing, because you see there's sometimes so much data and analysis that is difficult to get from 1,000 slides. What's the essence here? What are we trying to solve, right? What are the key things that we should experiment with, right? In terms of, are we in the right direction to capture a trend that actually resonates again? And that's a bit what Nicola said also to de-risking. And I know the accelerator is a lot about de-risking, because you can't understand the future by analysis that are done in the past, right? So you need to first understand, hey, what happened? Why do we decline? What, like Jeroen said, what did change, etc. You build hypotheses around this, but then you need to get into action mode. And that's, of course, what startups like, get out of the building. Or at least that was sort of the motto, right? In which a long time ago, I was encountered with all these materials, right, of steel blankets, etc. But you need to get into action mode at one point and start to do things to prove if you are in the right direction, yes or no. And then take it from there. And that has a bit to do with these type of methods. You can also build a roadmap, right? You can also see in terms of things that you have learned, what is working. Can we find new consumers fast enough, or do people find traction with our renovated product fast enough? How does that work, the speed, etc.?
Maybe also a question to Sebastian and Nicola, right? So because it's easy for us to kind of take risk, right? So we use it as kind of startup founders, and I can take small steps, and probably I can fix those things. But I can imagine
we can move fast and break things, right? But it's
or at least, right, we can also then fix things fast again, right, without with risk. But the question, I think, is so what's the balance between this risk and taking steps, right? And it's in how much is that holding you back in moving forward? That's if I frame that correctly as a question.
Yeah, I'm happy to try and kickstart that answer. What's holding us back? Well, I think just coming back a little bit to what Misha was referring to in terms of, organizations tend to have a lot of information, a lot of data, but maybe they don't know what to do with that. When I was reflecting on it, it's, and I don't know how to describe it, but all that information, if you look at it as the what, you have all of this what, but it's how then you make that come to life in the way in which, it's going to help you to actually understand whether or not you've got something from there. So to Misha's point, you distill it to something that then you go and you need to validate, is it actually going to do that? And the how is really important here. And I think that's the stultifying point in a lot of in a lot of places. And that's probably what's holding holding people back, and I think, or organizations back, is, and that how is not that difficult really, because you can do it in very lean, quick ways with minimal resources. You don't need to invest a huge amount of money. I think Misha has already said that, but organizations don't seem to be able to feel that comfortable with that kind of methodology. It doesn't feel like it sits very well with the traditional processes, which are, really, really important for organizations to have in order to make sure that the whole organization has something, structured that they can follow. But I think there is a place to put in these quicker kind of, methodologies that help to validate. So I don't know that there's always an element of organizations don't like to take risks, so they want to see a business case. The business case needs to provide the basis for which you apply the resources. But for me, that business case, it could be you could have early validation with that sort of quick thinking. So all of that information, resource data needs to be translated in something, that you can validate quickly, and then apply it back into the big business process that allows you to garner the resources and get to scale and things like and that kind of thing. So I think, I don't know if I've answered specifically your question on risk, but
well, I think you're starting to get into like how we can measure success in the short term a little bit, right? And yeah, even if you can validate things fairly quickly in a small fashion, right? These bets that you might make today, you're not even going to know if you're on the right track. You might know if you're on the right track, I guess, if you can define some kind of interim KPIs, right? But it's the time horizon on knowing if your bet's going to cash in or not, right? It's probably pretty challenging. Sebastian, how have you guys, or just what have you seen in the space in terms of starting to define these KPIs for something that's so
yeah.
big?
So the first observation is large food and drink companies are huge huge ships, so they have a lot of inertia. So getting them to move takes a long time, but also to stop them is also a hard challenge. So I think a lot of the risk we're seeing is not getting there on the right time, or also not stopping things that you already started moving and you should be stopping, but the inertia of the ship force you to continue it. And for that, tools like accelerators and all the initiatives help you to de-risk those approaches. So I think that's a way different large corporations are trying to deal with this idea of that the mothership is so large that once start moving, it takes a long time to start it, and then also to stop it is a challenging element. The main difficulty we'll have with this, we have all this exploring small ships around this mothership, if you want, but they still need to connect and have a conversation and a relation with the flagship, and that also there's always a little bit of friction there, because this big corporation has its natural approaches and process that were built in decades of learnings and developing, but are great for already developed brands and concepts, but makes in testing and proving hard. So trying to protect these independent areas that have ability to explore quickly and that making mistake is okay, and to learn fast is okay, and trying to bring a little bit of those elements of more startup culture into a corporation. I think it's a great thing that most of these accelerators are doing, and it's a big challenge also of the people who run them to constantly bring this culture into the corporate culture that by nature is different. So you need to transmit a little bit of both. If you're too entrepreneur in a large corporation, you will have a problem, but also if you have traditional corporate man in this innovation and accelerator part, you also struggle. So you need to have one foot in both ends to succeed, I believe.
So I wanted to bring there's been some great questions from the audience here, so I want to start to bring some of these up, and this one is pressing, right? It's exactly what you were just saying. It's you want to be trying a bunch of different things, right? But and wrapping testing of bets is key. So how can you be sure, or in an organization, how do you kind of go through the different dynamics of an organization to make sure that where you're operating and trying to move fast and learn and things like that is sort of protected, right? Because that can be a challenge, I'm sure. And again, it all gets back to company culture and how how conservative some companies may be. But I don't know, Sebastian or anybody, just kind of what you have seen as some strategies that can ensure that freedom
Yes.
to
So it's a great question, because for one end, you need to create a protect space for trying these new things. You need to protect it from business as usual. But at the other side, you cannot have this into a bubble that never applies into the corporation, because at the end it translates to what Misha and Nicola are saying. This is all about growth. So this innovation, unless it can translate into things that become real growth drivers, at some point sooner than later, they make no sense. So the hard challenge is one, create a space for these environments to explore much faster than you would do in other environments, to have flexibility that it's normally not in the right ways to do things in large corporations, but at the same time making sure that this applies and goes directly to the way it fits into the corporation sooner than later, rather than keeping an experiments that are sounds great, but they cannot be inserted into what the company needs for growth.
But in terms of finding these people, what I think is a very good signal is if these people are actually knowledgeable and interested to learn the business problems. Because they all like their own innovation ideas and the new stuff, and hoping that the new stuff will bring something new. Well, that never really happened, right? So sort of a lens on, am I understanding what I need to solve for that brand or business? What is their top 3, 4 challenges that I think I could contribute to solve? And that makes the us versus them thing also much smaller, because we're all in the end here ideally to solve a business problem, right? And I'm sometimes quite surprised by the ideas that are being pursued, which I can't route to any core business problem, right? So are we doing this because it's new? It's bad. It's really a dumb reason, in my opinion, right? So, and it will don't lead to anything. Because in the end, we all compete with the same type of resources, right? So then if you want to scale something, you come with an idea that, may be nice in the future, uncertain, and it doesn't even solve a real core business problem, it will not survive. So I think sort of a realistic, curious mind to what is the business that I'm actually working in.
And maybe just to build on that, because I think it was the 2018, 2020, and when accelerators were really popular. And the thing was to build new things, right? And new things have 2 problems. They always stay small, and usually we find things that we cannot produce at a large scale. Also, to Sebastian's point, right? It needs to be practical at some point, right? So also in order to be relevant, you need to work on things that solve a real business problem, but also stay connected to the organization that we can actually build it. Right? It's a simple thing is packaging. Right? If I need to build a liter pack, we all design these things that are beautiful, etc. Does it really matter if a consumer does it in a liter pack I already have, so I can produce it straight away? And that's the difference in nuance, where you stay relevant because you find something new, but I can also produce it straight away in a product line and in a brand. Or I do something that's automatically is too difficult to produce within the company, and it gets shelved away. So there's a thin line there, but I think we learned the hard way, Misha and myself, that we built beautiful things, beautiful business cases, but those were startup ideas. Those were not corporate ideas. So the method works, but the application, it needs to be closely linked to, so whatever you build is practical. I think that's by far the best advice.
And it comes also back to your P&L, right? So what are, can we build a P&L? What are the margins? And that's lacking, right? So there's a lot of testing going on, but then I still don't know, why do you test this? Does it bring us profit? Does it bring us growth? Any of those? Why are you testing in this direction? You could also test 20 other things, right? So, and that comes back to that person, that if you understand your core business problems well and how the management is looking at margins and profits, et cetera, you can link it back to something relevant. And then most of the things you don't even have to test. Basically, you don't even have to start. Right? And that's sort of, yeah, it comes a big bad, big and bad is almost the same, but it comes a bit back to what am I investing in? And how do I know what is big versus small, et cetera, et cetera.
Yeah.
That's it.
And probably it's also the time window.
Picking the right bets, again, that are aligning to the core of your business and leveraging core assets that you have. Otherwise, you might as well just be any other startup out there, just doing something random, right? And I think I got a great question here too, just kind of looking at, you know, some of these trends, and you mentioned margins, right? I mean, since this little bubble that we've you know, seen ourselves come out of in this post-COVID landscape, there's a lot more pressure on margins and profit, right, across the board, Wall Street, anywhere. So before, right, as if AI and the speed of innovation wasn't hard enough, now, you know, a lot of, you know, what we're seeing is that it used to just be about growth. Now it's growth and profit, right? I mean, is this something that you guys are seeing across a lot of businesses in the space? And is that fundamentally changing anything, do you think?
Well, I'll let others comment after me, but in the end, it's of course about profitable growth.
Yeah.
And what I said, if you do your homework in terms of the decline, the growth gap, as we call it, right? So what are the gaps that we need to bridge with the interventions that we do? Might be new products, repositioning, et cetera, but there's all. So if you understand this well, you can sort of filter out on what type of pathways you should start to look at. I mean, there's also many examples of basically that. How can we invest better in even our media, right? There's so many things on, if you understand your business case, your P&L, and how the business is built, and you dissect each of these elements, you can find, first of all, your efficiencies, and second, you will learn also where do we decline, why, a bit to the point Jeroen mentioned, and see how we could improve that case.
Yeah, I was going to not say it quite so eloquently as you do, Misha, but I think it does come back to, yeah, that question of the P&L, and I suppose I would play devil's advocate and maybe challenge, what does profitable growth mean? Because surely that's what everyone wants anyway. And each, you know, each different product comes with a different flavor in terms of what profit is, you know, from whatever gross margins are, volume, etc. So there's a number of different dimensions. So it's essentially come back to that P&L question, and what does it look like, and what are you trying to fix within there, and then what are the mechanics that will help you fix that. To Misha's point, you know, it could just be how you invest better, you know, into your top line, how you create better efficiencies, how you maybe mold a portfolio together that makes it just operate better as a total when you reposition it. So there's a number of different ways to look at it. But I guess, yeah, I would challenge the question of profitable growth versus growth. That's the aim, is for it to be profitable.
Sure.
From my end, I see a couple of challenges in general for CPG. So one end is private labels growing sustainable over what, 20, 30 years, and taking more and more space of the shelf. And the other stream, you have startups doing niche products that solve specific solutions and grow directly. So traditional CPGs have those two challenges. So if they continue to doing the basics, we'll struggle for one end with the private label winning there. And if they are not engaging with the consumers well enough, well, small startups might be actually going to these niches and taking it. So and I think that's a transversal thing for all CPGs. And for me, the only reasonable solution is engaging well with that long-term base of consumers they have built through their stories, understand them well, and serve them well through innovation. And that's where innovation makes sense, to understand well these consumers that they've been in many cases serving for decades or through all their other lives, and understanding how their lives been developed and what their lives have changed in terms of consumptions, in occasions, and so on. But they will still want the company of a brand that's been there with them for the life. But it's fundamental to innovate, understanding that paradigm, that it's not just being on the shelf. Their private label will have a very big space, and it's not just creating something new, because then there's competition happening as well with clever startups with quick products that are addressing a specific niche.
Yeah, and it is crazy how much the private label stuff are going on the shelves now. We did an event recently where I was interviewing the founder of Poppy Soda, and that was about 3 days before the acquisition by Pepsi was announced, right? But I mean, just the speed at which those types of products grew, and then copycats came, and it's kind of mind-boggling, honestly. So there were some questions in here around startups. So I do want to transition there a little bit more, just zoom in on the interacting with startups. And Alice from London was asking, how do we make it attractive for corporates to partner with early stage startups? I know a lot of what we've been talking about here is either through acceleration models or other models, right? It's a lot of it is seeing it through the lens of de-risking. Right. Now, Sebastian, you said that. Is that, Nicola, is that kind of the lens that you guys look at it from as well?
So this is a great topic for me. I've been an entrepreneur in my past, so I have a great connection with this, and I can feel the pains as well for entrepreneurs trying to engage with startups, with large corporations. And the first thing is there's such different animals in a way that's it's sometimes frustrating for a startup to get into a corporation and understanding their speeds and approaches. And my first advice there for startups that are looking there is, and it's advice from my own startup trying to get to the corporate world, is it might take you longer than the money you have in your wallet to get into a business with a large CPG. That was my experience in pre-Nestlé startup world. And be cautious about that element. Be cautious about that element, because the timings for the two types of organization are significantly different. The reality I've seen is most of these large corporations engage with startups, and they can engage with the startup, but at the moment that they already have a level of traction or a size or structure that allows them to survive without necessarily needing the injection of short-term capital or money that you probably need as an early stage startup. So my first advice is keep that in mind when you are approaching different corporations. Otherwise, you might suffer the consequences. At least was my pain in the past, trying to go through these approaches.
I think, so to echo on what Sebastian says, this is something I hear a lot from startups, right?
Yeah.
The impatience of getting a deal done with a corporate, and that most of the time makes it fail, right? They just don't understand that if you talk to one person, that internally they need to talk to 10 more before you can actually agree on things, right?
It makes most founders literally want to pull their hair out.
That's kind of the thing. And but what they also need to understand on the flip side, so right, for most corporates, a startup is a big learning ground, right? And usually they go for the bigger ones because it's easier. But if you look at technology, you want to really the early stage because they can show you what's happening in 10 years from now. And I think the trend where you see some corporates rather investing in a startup to do some research to show that things are viable is becoming more interesting versus giving the same money to a research company and talk to a lot of consumers, right? So there's this shift in trend.
Right.
So it's also how you position yourself in engaging, right? And it's not so much like you want a partner, but maybe just let's learn together first as a joint development, because I think most big corporates have big R&D, so they can probably already have built a lot of products. But the one thing they cannot do is test if it's actually viable in a consumer environment.
Right.
So if you position yourself as a startup to make that happen, and it's also the point previous about the incubation, I don't believe we should do incubation anymore. Why build these things? I'd focus on what's happening from 0 to 36 months. Anything beyond, go learn with a startup or something else. It's much cheaper and faster than if any corporate would build it, right? It's kind of a mindset shift. But I think the knowledge is what you offer.
Jeroen, and how do you look at smaller investments in this context, say corporates and startups?
So getting a little bit technical here, but let's keep it to this innovation roadmap, right? So I know what I need to do to grow my business with my current assets, and then I also learned if there's a ceiling, and I want to move beyond. I also know what I need to do to move beyond. And that part, I would then look at. I think it's kind of roulette. I think that's what you call it, John. So what if I would give 10 startups 25,000 euros to work my product and show what they can do with it? Right? And the good ones will actually start doing it because they will know if I do well, there's more coming.
Yeah.
So, and then you have this relationship. And if you invest small, right, on 10 places, you will learn a lot on what to do next and when or how. And we've seen this before that we didn't realize in the beginning when we built all these subscription startups, etc. Right, but corporates learn from that, and then they incorporate it into their e-commerce strategy because they learn how to engage with companies, right? So the value is maybe not in the startup, but it might be in an application somewhere else. And I think this where, if you look at the current trend with no investment, food investment declining, etc., the value is in the learning platform.
Yeah, startups are all about learning.
Yeah, and the learning goal, I think, needs to be well aligned, and to a certain extent, commercially driven, I suppose, with expectations around the KPIs. Like, what are we expecting that startup to deliver, and agree those up front, so there's no myths around what the end result's going to be.
Exactly. Yeah, because the good ones will then start proving the value on your behalf instead of you doing it yourself. I think that's where that probably doesn't sound that nice, but I think that's where the symbiosis is between startups and corporates, if you do that well.
Right. I agree. And it's, for the corporates in a lot of cases, it's, and we've heard this a lot from some corporations that it's, for them, it's the customer development, right? Because that's something that, requires a lot of iteration and a lot of fast moving and stuff, and that can be challenging within the corporate context.
Yeah, and there's only one way to learn, right? Just put it out on the shelf for people to buy it.
Yeah, focus groups and things like that are only going to get you so far, right?
Without all the leaks, etc.
Yeah. So I did have another question here from Jonathan. Jonathan, great name, by the way, but you've been giving us some awesome questions, so thank you. This one's pretty relevant too, and I knew that at some point we'd get to the build versus buy topic, right? Always a nice one. It's one of those that I'm sure is very much art, not science, but build. So it's really build, incubate, or buy, right? Actually, I guess, and I know that there's no silver bullet here, but I would just love to hear just some of the trends that you guys are seeing in the space, how corporations are starting to look at this, and if just recently, again, like in the current economy that we have right now, at the rate of innovation, if you guys are seeing the approaches to this change and evolve over time.
So what I've seen, it really depends how close you are from the core of your business. So the closer you are to what you are, your bread and butter, the most likely you're going to build it and develop it yourself. So for a coffee company, probably coffee-related products will come from internal development. There will be exceptions, but overall, that's where your expertise being, where your people are, and so on. The moment you go more to the outside and to new technologies or new approaches, the more chances are that you are open to explore acquisitions or partnerships, because it's not necessarily what you know the best, or might be something completely new that is outside your comfort zone. So most likely building software for a food company, it's not necessarily the greatest way to spend their money. So it's related to how close and far you are from the core. I would say how open most of these companies are to do it internally or be open to explore it externally.
Mm.
I think there's always this intriguing thing, right? So whom to work with and what to acquire in that sense, right? So usually corporates are used to acquire, also to Sebastian's point, is when they're a little bit more mature, right? When they're a little bit more advanced and they have a footprint. The question always, when we move more from consumer facing to R&D technology part, working with a bigger startup usually means you're already outdated, right? Because the time they're big, right, it's common practice instead of new things. So I think the question unanswered, and I also don't have an answer, but right, where the market is moving to, right? So if we're not incubating, if venture capitalists are not investing in these food tech startups because they don't find the space attractive anymore, right? How do we, as a corporate, then partner with these early stage, small 5, 10 really smart people, right, to kind of make it appealing? Because it always comes to a point when you have a technology and you want to incorporate it into your production line. Yeah, you're not going to stop to produce 5,000 items when, right, you have 100,000 running per hour from the same unit, right? You're not going to do it. So at some point, that's what the struggle is. But I think the unanswered question here, that's usually at the end of the week on top of my mind, how to fix this, is the timing for technology is small for corporate, because if you really want to learn, that's where it is. And what I see in acquisitions, they always buy too big, right? Which means it's profitable right now, but usually means for technology, it's already outdated at the moment it's big, because it's not future proof. So I think that's where there's an additional dilemma to think about. This is the future challenge. And I think, and I just want to drop it here. This is what intrigues me all the time. How to fix this.
It is intriguing, and we discuss it quite often. It's also a bit like indeed the timing, right? So there's a concept by, I think it was Rita McGrath, about inflection points. Is that if you can understand at the outsides of the market what type of new behavior is coming, which potentially can be making your business less relevant. If you get a feeling on a quantitative side on how fast this type of behavior is spreading through society or through a particular market, you can get a bit of a better sense of, okay, can I now find the right type of young teams, startups that sort of maybe are addressing this need already, and follow them, right? So how is that progressing also from a commercial standpoint? But it's difficult to see those small things because large companies especially, are not focused on these small things. So you also see, we can look at the same research report and we both see different things, right? So, and I think sometimes we are maybe a bit more trained to look at the things that are standing out, not because it is proven by 1,000 people, but anomalies, right? Things that do not match, right? So, and then if it doesn't match, why doesn't it match? And does this match, is there's a mismatch on a bigger scale, and how fast is it? You get sort of a sense on timing, perspective, consumer behavior changing. You can look for potentially technologies that are already addressing this, because Jeroen is correct, and there's a lot of reports around these acquisitions, also in the F&B. and you see that a lot of them are not delivering on the expected returns or ambition, whatever you want to call it.
Maybe
Yeah,
just
they typically, the success rate, right? And you can define success in a lot of different ways. Right? It's traditionally pretty poor.
Yeah. Maybe just to add to what Misha said. So if you look at, I think skincare, beauty and skincare is kind of a good example of where the trend is moving to. If you look at L'Oreal is more inclined to invest 100, 250K million in startups just to learn, right, and see how the market evolves before they acquire. And they're the ones that actually continue to grow in the market and outpace the trends compared to others. And so the from the outside, right, this looks like a good thing to reevaluate for yourself. And also to the point about startups, if this is true, then as a startup, it's not your point to sell your product, it's the point to sell your learning platform. There's a different mindset and shift on how to work with. Right, so a joint development agreement is probably more interesting than selling. Right, can you purchase 5,000 kilograms of my product?
And just quickly from my perspective too, it's there was a point a couple of years ago, I think, when especially in the the CPG space, there was the funding available for startups was few and far between. Right, it was really, really tough, and a lot of corporates were stepping up. But now, natural ebbs and flows. There's so much money went to AI and stuff that now investors are starting to move back. We're seeing this trend happen pretty quickly, and it's only accelerating with stories like Poppy and things like that, right? Back into that space. So I think it's exciting, and I would assume that probably some of those bets would be increasing, right? Because I mean, we said $250,000 into a lot of different companies. That starts to add up, right? Even for a large business.
Yeah, exactly. But you could also do 10 times 25,000 and actually see if the technology. But it's kind of a different way of playing it and filtering it. I think the essence is to the point. I think what Sebastian mentioned, right? So the more it's to consumer focused is today, the more it's R&D focused technology, probably it's future. So there might be kind of already choosing what to use, and if you look at innovation as a skill set, right? I'm running this normally, I'm running accelerator, running an incubator, invest, could also be applicable to the kind of topic you have. So you need to manage all or have all in your tool belt, but you can apply it differently based on the topic you have.
So we're coming up on time here. So I do have a last question that I want to ask, and thank you for everybody in the audience. When we do wrap up here, people can stay as long as they want. There's networking rooms, and I do encourage people to take advantage of those. But there are some startup founders here, and this is something for me as well, right? Understanding. I obviously come much more from a startup background than I do the enterprise background. If you guys were, if you could tell a startup, right? And there's a lot of startups, some in attendance today, but there's plenty of them out there who literally, like, they wake up in the morning and their dream is to start, doing a successful pilot or POC with organizations like yours, right? With big organizations. And but at the same time, like you brought up, Sebastian, right? Like they have constraints, and these things are going to take time. Anyway, long way for me to say, like, is there just like one piece of advice or something that you would give to those types of organizations, those startups, to maybe just make those puzzle pieces fit together a little bit, and just some advice for them?
If I can start this one, my best advice is a good startup will find a business partner at some point, and it will happen with a large corporation. It might take long or much longer than you expected. So my best advice is you will need to do that in parallel on another process to keep your food on the table for a few years, until you have the size and until you have all the procurement reviews and the financials and bettings and all those things that large organizations require. So if your proposal is good, it will find its space at some point with one organization or another. But you need to make sure that you have a long runway to make that thing happen, and don't basically kill your company in the process through the bureaucracy you will find in any large corporation, because that's the nature of these corporations.
And I've seen exactly that happen many times. If the startup is relying on those types of deals for runway, that usually doesn't end well at the early stages. Does anyone else have some thoughts on it?
Coming a bit back to the points made, so if you have a company in a particular category or industry, if you look at established brands, let's stick to the CPG, right? You have established brands, large ones. What can you learn in terms of what are they looking for in terms of their next steps, right? So what are the type of challenges they now are facing? Established brands in general struggle with, for example, recruiting new generations of consumers. So it's sort of to understand really what is it that your potential partners are trying to solve, right? A bit to Jeroen's point, can you step up as a actionable joint, how do you call it, joint development partner, something like that, right? To sort of help them solve their problem, right? It comes a bit down to understanding that better than everybody else, basically.
Yeah, I think it's a two-way street, isn't it? And sometimes that gets lost between the two parties. But at the end of the day, a partnership goes both ways. So understanding each other is super critical. And within that, the patience to know that one has to move faster but the other one can't. So I'm finding the common ground.
I think from the startup experience, think about the added value, right? So what do you do different? So I talk to Gen Z, I talk to Gen Alpha, I have a product that fixes, right? Something that's on the other side of the table they cannot do, but then right, so do something different. What's the added value you can bring to the other party on the table? And because if you sell overlap, right, it doesn't happen. I think that's the second one. And then also from a startup perspective, try to understand how decision making works. Right? Just ask a question, right? If I would offer you 10K, right? What would it take to sign that? And the understanding means that you can also then manage the process a little bit. So let's talk to the other one. I need to do a demo, etc. So you can manage that. But most of the times we forget that we go out. I talk to Sebastian. Sebastian's very happy. I go out cheering outside. We have a deal. Yeah, you're far away from a deal. Right? Not saying that Sebastian is not making a deal, but you also have to talk to people there. Maybe you have to talk to 3 companies because that's a company policy. Right? You don't know, but so think about added value, but also think about how the process works, and that's something we usually forget to do. But understanding that also makes you understand this takes 6 months. Okay, we'll manage, but I also will continue doing other things. That's the or at least the advice I would give, because this is usually the feedback I get when they talk to corporates. They're always happy, and then it takes 6 months. Not saying nothing is happening, but you have internal improvements, and that's kind of feels like things disappear.
And just as a closing note here too,
we say yes a lot. No,
yeah,
I could say, we nod a lot, say yes, very good, and then disappear.
It takes time. But as you were saying, Jeroen, like bringing the value add, right? And we've been talking a lot just about it. I think a lot of startups look at it purely from a product standpoint, right? Like, oh, we have a product which will solve your problem. Really, but what you're getting into there is that it's much deeper. It's bringing that learning, right? Oh, I understand this market better than you do, or I understand where this is going, this trend, or this, that just that. I think bringing that to the table as well is something that I see a lot of startups kind of overlook, where they're they almost take sort of an investor pitch kind of mindset, right? Where it's like, here's the product, here's, here are the features, here's the problem it solves, blah, blah, right? And that's, you need to go a little bit deeper, sounds like.
Yeah. Yeah, just as an maybe last example, right? So when TikTok launched for the first time, right, it was kind of a platform for 12-year-olds, etc. So there was a company here in the Netherlands, and they launched it, and an 18-year-old, fresh out of high school, and he just started emailing corporate CEOs saying, stop talking to those 35, 45-year-old brand managers because they don't understand. You need to talk to me. And the value was that he was actually the audience. So he got a seat on the table everywhere, built his company, and he's now one of the quickest growing agencies here in the Netherlands, just because the niche was my added value is I am that person. Right? That makes you unique. And just this is where understanding this is how you make yourself valuable enough for both parties to be interesting. And I think this is, as a small analogy, this is exactly what you need to do. And if you understand this well enough, that's when success will come for both parties, also for the corporate, because then they understand your one value and also makes probably more interesting and intriguing to partner with.
Amazing. All right. Well, thank you guys. You all stayed over here, and I know it's getting time to probably commute home and things like that for you those in Europe. So I just want to say thank you again, Sebastian, Jeroen, Nicola, Misha. This was a great conversation. Thank you everybody in the audience that were asking questions, and we will be putting a recording together for this for everybody that did register. So you can keep a lookout for that. So now we're going to close this stage portion of the event and go back to the networking rooms. So encourage anybody, if you want to meet some other like-minded people, we leave those rooms open for as long as people are hanging out. All right. Thanks again for joining, everybody. Have a great day.
Thanks, guys.
Thank you.
Bye.